So if you've been day trading for any amount of time, you've definitely heard the phrase double bottom and double top. When there is an area of support and the price has bounced off of it, it tends to come down and test it again and bounce off of it. Same with the level of resistance, the price will touch it and then come back up to retest it. The issue with double tops and double bottoms is you don't know if it's gonna be a triple top or not. So in this video, I'm gonna show you exactly how to trade a double top and know that it is actually going to reject off of that second retest. Welcome back to the channel, everybody. My name is Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable on a consistent basis. This strategy is ridiculously simple, so it does not require an 18-minute video. So this is going to be explained to you in the next 5 minutes. I've got 2 coffees because I've had 3 hours of sleep, so let's get into the charts. All right, we are looking at US 30 on a 15-minute time frame. You do not want to do this on a lower time frame like the 1 minute or the 5 minute because you want to look at key levels of support and resistance, and on those lower time frames, those are not key levels of support and resistance. They are kind of just these really weak levels. The higher the time frame, the more significant the level. So when looking at support and resistance levels, basically you're just drawing a horizontal line across multiple intersecting points. You're only taking into account the big rejection areas where the price saw a lot of resistance or a lot of support and bounced off of that. And it's that simple. Looking back here from today back to April 16th on US 30, I've got 3 lines and that's it. Now, what you're gonna wanna do is add some indicators to your chart to give you a visual representation of what's actually going on with the momentum. This is strictly momentum trading. The first indicator that you're gonna wanna have up on the screen is the RSI. Type in RSI to the indicators tab. It is the relative strength index. Put a star next to it. It should be one of your favorites. It looks like this, or at least mine does. If you'd like yours to look like this, add the RSI and click on the little settings wheel, change the RSI color to yellow in accordance with the color theme of the channel, change the upper band and the lower band to 50 and leave it as a solid line, and leave the standard input as 14. I like to have 3 moving averages up. They are smoothed moving averages, the 21, the 50, and the 200, just so I can get a clear idea of what the price is doing if we're trending up or trending down. So now that we've got that set up, we look at our levels, we see these key levels of support and key levels of resistance. So we saw the price come down here to $33,762, reject off of it, and then came back down to test again. And how do you know if the price is actually going to stop here or continue down? You wait for a rejection off of that level, and then once that rejection has happened with this big, huge green candle, you look at the RSI. You clearly see here we had a level and a level. This is completely flat and parallel. However, looking at the RSI, we saw a low point here and a higher low here, creating a divergence, meaning that instead of them being on the same level, one is higher or lower. It's easy to tell. You take your little trend line tool and you see that that is not level, yet these two are level, meaning that the momentum has diminished and we should see a pump to the upside. So once you saw this rejection candle, you're comfortable taking a long position. How do we do that? Wherever you enter in on this candle, you set your entry price and a stop loss below the bottom of the wick, and you're looking for about a 1 to 2 risk to reward ratio. That's it. Right here, you got 200 points off of this one rejection. One more example, and that's it. Look, we have a level here. We're waiting for the price to come back up and test this zone. It did it again. We got a rejection. We see it perfectly horizontal. It's on the same exact level. So we take a look at our RSI and we see this high and this one's actually lower. Drawing a trend line across it, you can see it is not horizontal, meaning that that should go on the downside. You place your short position with the stop loss above the wicks and you're looking for a 1 to 2. And again, you got like another 140 points off of this one move. And again, it only works on higher time frames. These are long-term trades. The reason is on higher time frames, you have a clear indication of actual support and resistance levels. So if you guys are still watching this video, that means that you like the video. So if you like the video, just smash the big thumbs up button right down there. But essentially, if you guys are getting onto your charts and marking up support and resistance levels, do this and then keep an eye out for rejections off of those levels, then take take a glance at your RSI and know that you can get in on your long or short position. Now, if long-term trading isn't your style and you want a good scalping video, check out this video on scalping right here. And if you guys enjoyed the way I teach and you want to see more videos like this, consider subscribing to the channel by clicking this button right here. I hope I was able to help you guys out. Thank you so much for watching, and we will see you in the next video.